Wednesday commodities and stock market update. So today we won't be doing the big tech stocks, and if you want to check the big tech stocks, check the video from yesterday. But today we'll also be doing natural gas, gold, and silver, and QQQ itself. And we might look at the big tech stocks if we have time, just briefly. Netflix reported earnings today and is currently red after hours, and Tesla is currently green after hours after it reports earnings, but it's still chopping around. You need to wait for its earnings call. Usually that will dictate the direction for the rest of the day. Let's take a look at natural gas. All right, so natural gas over the weekend, we were talking about, we drew this falling wedge together, and while we were looking at natural gas, and it's still inside. It bounced off of it pretty much exactly on Monday when we were talking about that it will likely bounce from this level. And now we're looking at potentially testing this 2.66 and 2.61 resistance zone. As you can see all this resistance zone right here, resistance, 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 resistance. So now we are back testing that resistance area as well. So that this resistance pretty much coincides with this falling wedge resistance. So it will take a little bit more volume for the bulls to break this. So what I want to see is a increasing in volume as well as a break of this 2.66 resistance with the falling wedge resistance at the same time, and get a nice move straight to 2.75 after we break that. If we do break 2.75, we're going to come to 2.8 and 2.86. So that is the bull case scenario if we do happen. Let's take a look how many percent that would be. That'd be a 8% move. And for natural gas, it's definitely doable. This thing can move 9% in one day. So, all right. And if we do break that, this level, we are looking at $3. Remember I talked about volume. When there is not a lot of volume in an area, see, just one candle, same as this guy, just one candle here. That means there's not a lot of resistance in this zone. So there is no Bob, Sally, or Joe wanting to sell to break even when the price comes up to this level. So there'll be less resistance when we come up to it, meaning it is easier for the price to go higher to this next level of resistance if we do. And same thing for the downside. It's a little bit less, a lot more volume down here. So that means when we do come down to it, we have more support because price is currently above this level. So that is why we did even test this 2.47 support. That means it's a good sign for the bulls because when we break a resistance, this 2.53, the goal for the bears is to get to the next support. But when the bears broke this support, they couldn't get to the next one, meaning that it's weaker selling. So that's what happened here. You see, it's pretty much a double the bottom for Friday and Monday. And then bears couldn't get to the next support. Weak selling, bulls just took it back. And currently now we're testing resistance instead of testing support. For your bear case, most ideal for you guys is to hold this rising falling wedge resistance and do not get over this 2.66. And say today could be a slight rejection. So let's zoom in and let's take a look, see what it looks like in that upper wick. So we had this mini 1 hour upper wick. I'm gonna zoom into the 15 minutes, see what happened there. All right, so I wouldn't say this is a strong rejection, even though we did come up to this price level and sold off right away. But the thing is, we are still trading in the upper range of the day, meaning we're still not that far off from the resistance. If it was a rejection here, and then we came all the way down here, I would be saying, yep, that's a pretty clear rejection for me. But as of now, we did reject. Bears played defense, but bears did not play any kind of offense here. So we chances of us testing it again tomorrow is probably pretty likely due to bears didn't really follow through over here playing offense. bear was serious about bringing this down, we would likely see this candle breaking this pivot, and we didn't get that. So as of now, the probability of the bulls testing this upper 2.66 and testing this falling wedge resistance again tomorrow is quite high. So we'll see. And this looks like it's shaping up at equilibrium to me. So equilibrium just means a tightening range. See, we're just tightening up, meaning the initial move is the biggest move. The next move is always within the next move. You can see all these moves are within the next move. So once it finishes tightening up, it will break out slightly, whichever way it is. Although this is, it's intraday, right? So this is only from here to over here. It's like 2 hours. So a 2-hour tightening range breaking out isn't something like fireworks or huge or anything. But if it's something like this kind of tightening range where it took like 4 months to break out, then we get some fireworks. You can see from here to here, it broke out 15%, right? It's all different when the tightening range is only 2 hours versus like a 3 months tightening range and breaking out. So yeah, so after that 15-minute range breaks out, might get some follow through, more volume coming depending on which side it was breaking. Because if it breaks that side to the bear side, then that's a little bit of another rejection from the falling wedge again. For your bears, that's the most ideal scenario for you guys. Reject from that 2.66, then come down to test this prior low. So we can't. Call this a double bottom. So if you guys can't get over below this, then test the 2.4. Bears aren't really going anywhere. Yeah. And then if that happens, we're coming down to 2.37. As of now, no signs of that yet. You bears want to definitely break this falling wedge support bottom first too as well. So you guys are too much a battle between here and here. And I would expect as soon to break bull. That's the current probability. Obviously, it's not going to 100% going to happen because a falling wedge is usually a bullish pattern when we have a strong move up towards it and a falling wedge and continuing break above. If we had a weak move coming to a falling wedge, then that's a different story. But as on the weekly time frame, we are currently in a weekly uptrend, strong weekly move into a weekly falling wedge holding the 50% level. And the chances of that is still favoring the bulls at the moment. Yep, because we did try get below 50, but we closed within the 50 twice both weeks so far. Obviously, we still have 2 more days this week. So if we do close above the 50% mark from this A to B move, we have retraced over 50% of that. So as long as bulls can hold above that 50% mark, the chances of it breaking bull out of this falling wedge is more probable than it breaking bear. As a trader, we just want to see all the things that help us increase our probability of the side that we want to trade on. And then we just leave it to whatever the stock gods do, because we can't really know exactly 100% which way it's going to go. We can only increase our probabilities of our trades and set our stop losses properly. Because if it breaks below this double bottom and closes below here, then the next move is going to start favoring the bears on the next bounce, where they can potentially shape up the weekly downtrend. So now, no signs of that yet. If it does show up, I'll let you guys know. And currently, it's still a little bit of a battle between bears and bulls, because weekly is an uptrend, but daily, we're in a daily downtrend at the moment. So bulls need to do is break above this pivot to negate the daily downtrend and change the trend back to a neutral trend. So if we do break above this pivot, now we're back to the neutral trend. Then we got to shape that higher low here and break above the prior high to change the trend back to an uptrend. It's like what we did here, the bull. See, initial move. That's the higher low pivot, and we broke above the prior high. The daily uptrend confirming, and then now over here we shaped up the daily downtrend. Now we need to get that back for the bulls. See if the bulls can do that. And the bulls stepped up their very first step. Hourly trend is always the thing that I talk about forever. It's the very first step for a trend change. So now the bulls have an hourly trend change back to an hourly uptrend. So now we'll see if bulls can play more offense for it to get that daily trend change back and break above this falling wedge. All right. Same thing for UNG. This is a tradable ticker for natural gas. Same thing, falling wedge. We're testing it right at the spot as well. So if natural gas breaks, UNG is going to break above. So very similar, 7.16 level. And this falling wedge, I want to see both break at the same time, some volume. And then we're likely heading up to 7.61 once we get that break. The bears, very similar. Break that 6.8 and the 6.63 level. You can see all this wicks down here. Same thing, double bottom bounce. So if you guys can break through that, then you're a good chance of the bears coming to 6.31. Bulls break above this too. We're likely coming back to here. And we'll probably get some form of break in the next 2 days. So it'll be very soon. All right, let's take a look at. So BOIL is a 2x leverage ETF for the long side. So if UNG is up 3.4%, BOIL will be up the double of that. So you can see it up 6.7. And KOLD is the short side for leverage on the downside. So it'll be down at twice as that. You see down 7% on the Tuesday. You don't want to be charting BOIL or KOLD if natural gas breaks support and you're long on BOIL. Your BOIL stock has also broken support, even though if it didn't break on this chart. So you want to be charting leverage stocks and just chart the chart natural gas and UNG. And yeah, if those two broke support, BOIL and KOLD already broke support. Same thing, if it breaks resistance on those two, these guys already broke resistance. So you want to be charting this. Obviously, you want to know what price is when you're buying BOIL, but you don't want to be using it as a chart to chart your technical analysis. All right, let's take a look at gold. So gold, we've been looking at this falling wedge for a long time. So this is what falling wedge looks like when it breaks bullish. So you natural gas bulls are hoping to see the same thing for like a bull break once this falling wedge finishes. It's whatever it wants to do. So it's kind of like this, you know, chopping down, and then gets to the end of the pattern, hits a strong support right here. So that black line held it, confirms a trend, breaks out. But of course, all natural gas bulls are hoping for, but we'll see which way it goes in the next couple of days. But for gold, congratulations, gold bulls, because you see this black looking line was a longer term support where it was bouncing off of here, bounce off of here, bounce off of here, came down here to test it again, bounce off of here, bounce, bears tried it again, and then the bulls just held it again, bounce. And then we also broke out of that falling wedge. You can see once we broke out of that falling wedge, see all this volume coming in. And then bulls took over. So essentially what helped this breakout as well is the dollar X, DXY correlated with gold. So you can see it's inverse correlated, meaning if the dollar goes down, it usually favors gold. That's what we got that move. When dollar went down, gold broke out. Yep. So where are we looking at the next level? I'm looking at up here. If we continue, 2000 is going to be a psychological resistance and also a resistance zone as well right here. See all this rejection, 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 a million rejections here. So 2000 is likely going to be a resistance. But so if we shoot straight up here, slight pullback is not that big of a deal. Just like this one right here. Every trend, even bull markets, needs a slight pullback. So it's not anything serious. But the size of the pullback is going to help us determine if it's a healthy pullback or not. So as of now, we don't know what the size of the pullback is going to be. But when we do reach here, it's very likely going to be a slight rejection because bears are going to play defense here. And we'll see how how strong of a defense they're going to play, and then if they're going to play offense or not once they at level. But as of now, no signs of slowdown yet from this breakout because you can see even in the hourly chart, Still very strong. Close at the top of the range. Same thing as silver. Both break out at the same time, but gold and silver is correlated. And you can see we are now back testing this pretty much 52-week high zone. Area where it's always trading for the last year. So it's the same zone we're testing. So this is going to be the zone we're likely to be chopping in for some time around and see where it wants to go. And no signs of stopping as well. You can see silver is still closing at the close to highs of its day. And similar to gold, we're going to have this falling wedge. Look at the hourly. No red flags at the moment either. Hourly in the uptrend, everything intact. Close to highs of the day. So next stronger resistance I'll be looking at would be closer to this level. Before we get to this level, you can see a couple of rejections here, a couple of rejections here as well. The $25 mark is going to be what I'll be looking at, and then it'll be the 26. We'll need gold and silver to break together then, breaking that 2000 level as well as silver. So we'll see what they can do. All right, let's take a look at the market overall itself for QQQ. And so yesterday I was talking about potentially it's a good time to start hedging a little bit and potentially increase your hedge as we see if there's any rejections. And we didn't really get a notable red day or anything, but it's just down 0.02%. But we hit my target resistance where it's that 388 and 387 zone, because that zone coincides with this bottom of the all-time high structure. So bottom of the all-time high structure is going to act as resistance when we're coming up to it. And got some AI news on Apple, and it was a slight sell the news look. It wasn't that big of a sell-off. You can see on the 30-minute chart, this is where the news came in, right there. And we had a sell-off, and then it sort of just goes sideways till the end of the day. So I wouldn't say this is a blow-off top, but it will be a blow-off top if we do roll over and start to go down after this news, after it's AI. So it'll be more like a psychology of it. It's just essentially people are numb to the AI news now, and they don't really want to buy Apple anymore at the all-time highs, even if it's with an AI news. So that's the psychology of a blowout top. But we'll see if it actually happens. We need more follow-through from the bears. Like I've been saying, hourly trend is always our guide. And have the bears confirmed an hourly downtrend yet? Not yet. So I've been talking about this for a very long time, even though I'm open to both shorting and going long. But so now we have a initial move down on the hourly. And this is what? This is the pivot, right? Because this candle is above the prior one. So now we have formed a lower high, meaning this high is lower than the prior high. So what do we need now to trend? We need this move to break below this prior pivot low for us to have a hourly downtrend. So we don't have that yet. So meaning bears have not confirmed an hourly downtrend at all. That was a 30-minute chart, but this is the same concept, exactly the same for the hourly chart. So we'll see if bears can break even 384.3 tomorrow. If not, there's zero talk about bearish chart or anything, or a crash or whatever it is. Because if the bears cannot even confirm an hourly downtrend, the daily chart is not going to go anywhere, right? It's not going to just crash without an hourly downtrend or anything like that. But so as of now, no signs of that yet, but it's looking like it might shape up tomorrow. So we'll see if we can actually shape that hourly downtrend tomorrow, or maybe it would shape up in the future chart overnight. We don't know, but we'll see it when it shapes up. But trying to get a little bit of feel of that. But so be careful a little bit out there to not be adding all the way up here. So yeah, that's all I got for you guys. And if you guys got any questions, feel free to put it in the comments below. And if you're to subscribe, you guys made it this far or learn anything. And I will see you guys tomorrow for the big tech, 7 big tech stocks and market update. Have a great rest of your guys' day.